Okay, welcome to the mortgage market deep dive with Hypoport here. As you are aware of, Hypoport is acting in a German mortgage market. We have a credit platform which transacts every fourth German mortgage. We have a franchise system which advises 3% of the market. And we have with the real estate platform offerings for this market to automate the process of getting homeowner. And so we are linked to this market heavily. When we say we are linked to the market, first view on the total German housing market, because this is the underlying core demand. Less than half of the German population is living in their own space. More than half of it is renting. They typically rent from small landlords in an area which we don't serve. And they typically rent from small landlords if they are German middle class, or if they are in the lower quarter of the market, the social housing associations provide services to them. So our core market is the home ownership market with our mortgage platforms. We don't serve the small landlords, and the social housing associations is a special market we address as well, but this is not in the center of this what we talk today about. When we talk about residential mortgage market here in Germany, it only occurs for now for half of the market in a growing environment. So how does the mortgage market develop over the last 15 years? You can say before the free labor movement in Europe, the German housing market and the German mortgage market and the prices of homes were just stable. 50 billion per quarter, new mortgage volume. You could be sure that your property value will increase slightly, more or less on the level of inflation rate. You financed your mortgage for 10 years fixed, and that's it. It was a pretty boring market, I can tell you. And even when interest rate came down from something 6% 15 years ago to something around 3% 10 years ago, this mortgage market stays as it was. People lended just 50 billion and used this to buy their home. This changed with the European integration. People were allowed to move from South and East Europe to Germany. We have a huge net migration since this time, and these people demand housing. And if possible, they are used to buy, actually, not to rent. And these people were driving up their prices in this market. And with these prices, let's say the environment for the Germans living here changed. It got more difficult to get something in the renting market, more and more. And to switch to the home ownership market got more and more beneficial, but because of the rising prices as well difficult. So what happened? The outsiders bought, the Germans hesitated, and in total, the number of transactions went down. And with increasing prices and numbers of transactions down, the mortgage market just developed slightly from a 50 billion market per year to a roughly 70 billion market per year. And this with unbelievable low interest rate. So our 10 years fixed interest rate mortgage, the typical one here in Germany, dropped below 1%. You could lend money for 10 years for 0.7% easily, not long ago. But Germans didn't buy because prices were too high in their feeling. Okay, so that's why. Pretty interesting what the price dynamic did to the mortgage market. As you can see, there was more or less still a link before the European integration started, but with the European integration, just roughly a quarter of the price increase ended up in additional mortgage volume. So the market is not driven by rising house prices, and actually because of rising mortgage volumes would be an indicator for a price bubble. You can see here that prices didn't go up because of more mortgages lended. Prices just went up because of the demand for space. And I would say because of an historically underpriced German household stock. So with this in place, it gets more interesting to understand why it's so underperforming when you look back and why we are just ended up with a 70 billion mortgage market per year. For this to understand, it's important to get an idea of the three sources of mortgages here in Germany. We have roughly a volume of, let's say, 20 to 30% in refinancing, the lowest, the gray bars. And pretty surprising for everyone who's used to Anglo-Saxon mortgage markets, the share of refinancing went down with declining interest rates. The reason here is In Germany, you don't have any prepayment option. You lend your money or you borrow your money for 10 years plus, and you have no chance to refinance it before this 10 year. So right now, we refinance mortgages which were underwritten first time in 2012 or 2013, and the mortgages which are sold right now, transacted right now, will be refinanced in exactly 10 years. So in 2032 and 2031 maybe, there will be the refinancing of the same mortgages. Because of this, we have in total and in absolute numbers, very, very stable mortgage volume of refinancing. And as soon as the other shares go up a little bit, so especially purchase and building goes up, then the relative share of refinancing goes even down. Next, building, as you may recognize here, it's pretty stable as well over the last 15 years. Something between 15 to 20% market share, you can say, is coming from new constructions. This is thanks to the heavy regulation here in Germany. It's not that because of an attractive interest environment, it gets easier to build a new home or a new apartment complex here in Germany. Because for a long period before this European integration, we were used to shrink as a society. We developed a regulation to make sure that the density and the quality of our household stock improves. And because of this, it is very difficult to develop new areas for housing in Germany. It takes 20 years to do something like this, build something outside of a defined city area. So with this comes huge stability as well on this area. And on the next chart, we will talk about this, what is driving this area actually. Okay, and the largest, you can say, is the purchase volume. So existing homes, apartments and single family houses, which are sold from one owner to the next buyer. As you can see, and as a result of the fact that the two others are already pretty stable, this one is a stable market as well. And there it gets now interesting. Why is even this market stable when interest rates goes down? So let's start with purchase. There are two core vectors which influence this market. First is heavy regulation. It's pretty expensive for a family to buy a home. We have transaction costs of something, let's say, in average, around 13 to 15%. We have a huge tax on it. We have a huge broker fees, and we have lots of fees charged by municipal operators of a cataster and so on. This makes it pretty difficult to step into this market, or pretty expensive to step into this market. On the other side, you have a pretty locked renting market, locked in two ways. If you are inside, you have a stable and low rent. If you try to enter it, it's impossible. This makes it financially pretty expensive for a family to leave an old renting apartment and to migrate to a home ownership. So costs on the one side, on the other side, low rents which you still profit from. What is driving this market in a positive way is life events. So in Germany, you are not deciding to buy something because the interest rate is low and it may be a financial smart decision to buy. You do this because you fell in love and you need a new apartment, and you can't find this anymore in the renting market because this one is locked. You need additional space because there are children coming, or they are already there, or they are getting more, and it gets tougher at home to handle them. Or you split with your partner and you need separate apartments now, and this case different. In all these situations, it got very difficult to solve this in this renting market, thanks to the huge net migration that we had. You have to solve this in the home ownership market. There you have to make this step to cross the regulatory and, let's say, hurdles and get into this market. So, but this is driving transactions. And right now you can say roughly 2 million families in Germany live in a situation which they don't like. They suffer from this. Just they still couldn't make this step to the home ownership market. And for a long time it was like this, that the rising prices kept them from acting, but the declining interest rate compensated this. now we have a situation that on both sides there's stress. So prices keep going up. Interest rate now going up as well. So if you don't act faster, then it gets just more expensive and it gets more difficult for you. And the core adjustment the family can do then is, let's say, choose a cheaper location, reduce the space you acquire, reduce the quality you acquire. And the faster you decide on this 3 axes and do the decision, the earlier you get out of the living situation you were in and you don't want to be in. And this trigger events just occur every month. There are a couple of 100,000 trigger events here in Germany where additional families join this pool of people who need to adjust their living situation. And there's only one way out. Everything else is for the purchase side not relevant. So it's not relevant how the labor market for builders looks like, how the material costs are going up or not. It's actually just a small driver that you may even miss an home office and you need one, or you want to move outside because you have children already. These are small additional drivers, but this is it's not comparable with let's say a divorce. As well, the economic environment doesn't drive this mortgage market. You can see this when you look back on the market volume, 2009, we had a huge financial crisis and a tough economic environment. Nothing happened in the mortgage market and on the purchase side. And the same during Corona, we had a tough economic environment and nothing happened in the mortgage market because the drivers are the trigger events in your life. So yeah, and you don't buy because of interest rate. Germans don't even optimize because of the interest rate. This is for them, when the living situation is fine for the family, it's fine, and they stay in this home until they die. They are not upgrading in between. This is a very untypical move. So as well, interest rate is not relevant because this could trigger it. Okay, so second market, refinancing. As you understood by now already, there is a stable inflow of refinancing because everything what was financed 10 years ago. So there is no regulatory events, no resources or other triggers which let you refinance your mortgage. And even the interest rate just slightly changes in which moment you are able to refinance. You have to wait this 10 years, and then you have the chance to close a new deal with a mortgage provider of up to, I would say, 3 to 4 years in advance, but that's it as well. So you have a low level of flexibility, and this comes actually with a price tag as well, this to refinance a little bit earlier. So most of the people wait until a couple of months before their fixed interest rate period is due, and then they do the refinance. Okay, new construction volume, something which we're driving the US market, the Spanish market, UK market when interest rates are low, is actually not having any impact on the new construction volume here in Germany. The core limiting factor for new construction in Germany is the availability of building land. It takes 20 years to develop a new area. And if you have a land that can, where you are allowed to build something on, then you don't sell it. You keep it at the prices, value is rising all the time, or you build by yourself on it. And this is the typical reason why you have this land, that you or your children should build something in a couple of years. The total construction volume here in Germany, from a low bottom of something around 150,000 units only when we were pre-European integration, went just up to 300,000 units. Because of the huge net migration and the huge demand for housing here. And 300,000 units, it's in Spain, the highest level of new construction was 1 million units per year, and Spain is a third of Germany when you look on the population. So 300,000 units per year is only sustainable if you don't have net migration. And we can't just build more. Because there is no land for this, and we can't change our regulation because the impact from the environmental side, from the neighbor side is so well designed that it just gets difficult. Besides this, that land needs to be available. Let's say the need for new constructions is triggered by let's say when your children arrive, so you acquired the land, you waited for a couple of years, children are on the way, then you build. Or you try to find empty ground with a permission in this moment. But still, this is not changing how many houses are built. Someone is building the house on the ground where there's a permission. This is the core reason. So, and even when the prices for construction may influence how costly it is, the interest rate is only changing how costly you build, so in which quality level you build. So when the interest rate goes up, you just build a cheaper house on the same ground. It's not that you don't build it anymore because it's the only way to solve your trigger event, children. Okay, renovation market, we don't need to talk about. This is a small only. I often say now, European integration is a key driver. The reason for this European integration is the economic power of Germany, a huge labor demand because of our industry, and as the heart of Europe and the core of Europe from an industrial perspective, even looking forward for the next 5 to 10 years, and with the boomer generation leaving the working market, we have a huge demand, and this huge demand will be met by huge net migration. Besides this, we have an increasing life expectation in Germany. Every year, our life expectation increases by 1 month. And this means a lot of more apartments needed to host all these people. And thanks to the renting market, people just stay in their apartments. Even when they are only one, they occupy in average an 80 square meter space. And when they live longer, 80 square meters are occupied longer. And this is as well the reason why the numbers of one-person households goes up, especially in the renting market. There's just no benefit of, let's say, downgrading your living space, going to a smaller space, because the rent increase in this moment is so high that you have a financial negative impact on your household budget. So this means all these trends leads to a permanently additional demand in this market especially with a huge focus on the metropolitan areas. And by the way, last year was the first year where Germany had a positive birth rate again. So this is as well a reason of the net migration, because people who are coming here have a different kind of, let's say, fertility level than the German population, which drives the demand in the next years as well. Supply side, just to make it one more time explicit, the longer life expectation drives down the number of transactions. As long as you can stay in your house, you do this. With the learning from the Corona environment, you don't go to a pensioner home anymore because of the additional risk. You stay as long as you can, and the service industry around this got pretty well. So you can just do this. The high cost of transactions makes it as well difficult for older people to adjust. So to sell your home and move to a smaller apartment costs you easily 15%. And so even when you stay in the same quality level, you lose 15% of your space just because of transaction cost. So you don't do this. And you have a lot of reasons just to not act in this case. And this is a reason, especially for small landlords in the past, with negative interest rate for long term, there is as well not an incentive to sell an apartment, because with all the capital that you would realize with selling, actually there is no good alternative investment to do this. So at new construction, I said this already, is stable. So all in all, the supply side is in the best case neutral, you can say. And for the last 10 years, actually, we saw less and less supply in the market. That's why, even with a strong increase in the price side, the number of these transactions declined, and the total market volume, which was generated newly, didn't even live up to the price increase. Yeah, so increasing demand, stable supply, 2 million are waiting already and looking for a new home, a locked renting market where you can't adjust anymore. So prices for properties in Germany will keep going up. They are not sensitive to interest rate. They will keep going up. And with this, the mortgage volume will go up in the next years, whatever happens on the interest side. So and just to remind you, we are talking all the time now about the gray line and the headwinds that we may expect here in this market in the next couple of quarters and years. We digitalize this market and we heavily outperform it. Every year, double-digit additional growth above the market volume change. So when you judge on Hypoport, be aware on all these dynamics in here. Thank you.
Since you watched this company video until the end, I'm guessing you like the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at Seat11A can make a company video with and about you, please email us at community@seat11a.com.